Hi guys, what's up? I hope everybody is doing good. Yeah, it feels great to be back on YouTube. And I'm doing this video to help out a few people who are now literally confused with what to do with the CARO 2020. For those who have learned CARO 2020 afresh, I think it's all cool. You guys can just watch this video as a revision. For those who have learned 2016 and who are now in the phase of preparation where you need some help with what are the changes in 2020, this video is absolutely for you guys. I'm also going to include the material that is relevant to CARO 2020. It will be available in the link that is there in the description of this video. Also, I want you to watch this video through to understand what are all the changes that have taken place in the CARO 2020 compared to CARO 2016. I know you guys have a shortage of time. That is exactly why I'm making this video, because if you already have studied CARO 2016 and you know that very well, there are very few clauses that you need to upgrade yourself to. No doubt CARO 2020 is much elaborate, has much more content than 2016. So in this video, I'll be taking you through all those details. Watch the video in full and have a complete understanding of what you need to upgrade from 2016. And once again, I'm mentioning the fact that guys who have already watched this 2020 CARO completely as your new learning, then you really don't have to do this video if you are worried on time. And if you think you have the time, you can always learn and understand what the new changes are, and I'm going to explain anyway those points in slighter detail as well. So let's get started, and we will go around with the very first point in CARO. The applicability has not changed much, so you can run through the applicability and then I'll tell you what the changes in the clauses are. So let's get started. So there you go guys, that's on your screen right now is the complete order, and once again the link is there in the description for the full material. If you already have one, you can just use that, no much of a change, right? So what I'm going to look out for are only the changes. So applicability absolutely has no changes there, so you can just quickly run through it along with me. Every company, including foreign company, to whom the order is applicable, except in case of banking, insurance, one-person companies, Section 8 companies, small companies, and a private company not being a subsidiary of or holding of a public company, whose paid up capital plus reserves are not more than 1 crore, borrowings exceeding 1 crore, and I mean does not exceed 1 crore, and total revenue if it's not exceeding 10 crores. So rest of the points continue to remain the same, and even the explanation continues to absolutely remain the same. So straight away let me move on to the clauses. Yeah, there is one particular point before we start with the clauses. Here is an important fact. The order specifically provides that it shall not apply to the auditor's report on consolidated financial statements except in case of clause 21. That is the last clause of CARO which is newly introduced, and we will obviously see what that clause is by the end of this video. Okay, so that is one point. Otherwise CARO is not applicable to consolidated financial statement. That's already a known point. There are a lot of points which we have to make a mention of in para 3 of the order, and when it comes to para 4, that is about wherever we are trying to give any explanations to points that are answered in negative, that is also supposed to be given. So para 3 and 4, you know what the contents are. Straight, let's move on to the first point, which was earlier titled as fixed assets. It's now titled as property, plant and equipment, because that's how we call it in the current times. Property, plant and equipment. And here the first point, that is point 1, clause A and subclause capital A, there is no much of a tension or change there, because that is the same point. Whether the company is maintaining proper records showing full particulars including quantitative details, no much of a tension there. But there is a change or an addition you can call to the subclause B, whether the company is maintaining proper record showing full particulars of intangible assets. Now this is a newly added point that I would want you guys to obviously note. Okay, so this newly added point that you are seeing here is a pretty critical one. Okay, so there we go with a little detail out there. So as per AS 26, whatever has been classified as intangible assets, or in AS 38, whatever has been classified as intangible assets, their details have to be given in clause B, that is part of clause 1 subclause A. Now this is not there, and this is a newly inserted point. Self-generated intangible assets to the extent permitted by the relevant accounting standards and their classification. Also, whatever acquired intangible assets are there, that also has to be taken into consideration. So that is a point that has been newly brought in. And physical verification by the management at reasonable intervals, this was a point that was pretty clear. Verifying once in at least 3 years, no much of a change there. Now if you look at point C, where the title deeds, now there was just a point like this in the CARO 2016, the third point, where it just went on to say that whether the company has maintained any title deeds. Now, whether the title deeds of all immovable properties other than properties where the company is the lessee and lease agreements have been duly executed in favor. So leasehold properties need not be included, but otherwise every other property that's in the name of the company, they have to be included in the list, and if not, provide the details in the format. So if something is not being owned in the name of the company, that detail has to be also presented here. And then two new points have been added. So till now whatever you've seen, there are only subtle changes. So clause 1 subclause A and capital B, the subclause was added there, that is on intangible assets. But when it comes to clauses D and E, two completely new subclauses have been added here. Whether the company has revalued its property, so this point on revaluation is completely new. Whether the company has revalued its property, plant and equipment, or intangible assets both during the year, and if so, whether the revaluation is based on the valuation by a registered valuer, and if the change is 10% or more in aggregate of the net carrying value, then a breakup of that also has to be checked and discussed. Okay, then clause E, new point on Benami transactions, whether any proceedings have been initiated or they are pending against the company for holding any Benami property under the Benami Transactions Act. What was the three clause point earlier is now a five clause point on property, plant and equipment. That point in detail, there could possibly be a question on this one, because any new changes generally when made, questions are very probable from that. So property, plant and equipment is the very first the order. Then moving on, second one, I hope all of you are well aware about inventories. But then there is a slight catch again here with respect to a new insertion plus a slight change. What is the change in clause A? If you see, whether physical verification is being conducted at reasonable intervals, no much of a tension there. But we come to the second half of the point. It says, in the opinion of the auditor, the coverage and procedure of such verification by the management, talk about that, and is it appropriate, whether any discrepancies of 10% or more in aggregate. Now there were no numbers in the past, but now there is a mention of discrepancies of 10% or more in aggregate for each class of inventory if noticed, and if so, then whether they have been properly dealt with in the books of account. The question continues to remain the same, whether they have been properly dealt with in the books of accounts. But if the discrepancies are 10% or more, that's what the clause specifies. Now, B is a completely newly added clause. I hope all of you are aware of the hypothecation of stock. And if you stock as the security to bank and raise money, that there is a limit specified in excess of 5 crores. So the new point goes by, whether during any point of time of the year the company has sanctioned or been sanctioned a working capital limit in excess of working capital limits in excess of 5 crores rupees. Very clearly mentioned it. If you have taken a loan where you've been sanctioned a limit of 5 crores in aggregate from banks or financial institutions on the basis of security of current assets in excess of 5 crores. If you are given current asset as your security, whether quarterly statements or returns filed by the company with such banks are in agreement with the books of accounts. So what you find in the bank and what are the numbers in the books of accounts, are they the same or not? That is something that we need to cross check. So that's your point in inventories. So I've covered 2 points here, both first and second one having changes. And let's quickly move on to the third one. Again, there has been a very interesting change here. Earlier talked only about those parties who were covered under the register under 189. This point is earlier meant only for related parties, but if you right now read whether during the year the company has provided loans or provided any advances. So did you provide any loans or advances? I have made investments or okay, yeah, investments, provided any guarantee or security to parties mentioned in the register under section 189. That's how 2016 clause used to read. But if you look at this now, it's very plain. It says whether during the year the company has made investments in or provided any guarantee or security or any loans or advances in the nature of loans secured or unsecured to firms, companies, entities or related parties. That's all. So that includes everybody and not just those people who are mentioned in register under 189. So this now is not only talking about related parties, it is talking about everybody. That is the point where you have to watch out a little bit. Rest of the points are very much here. The company has provided loans or advances or the guarantee to any other entity whose principal business is to give other than obviously no, this point not applicable to those companies who are in primary business of giving loans, not for them but for anybody else. Have you given any loan guarantee or security on behalf of it? Then the aggregate amount that you gave as the balance outstanding in the balance sheet with respect to such loans and advances. Also, the aggregate amount during the year and the balance outstanding at the balance sheet date with respect to such loans and advances which have been given to other than subsidiaries. So, how much you have given to joint ventures and subsidiaries other than that. The table is very clear. You got to go by reporting in that format. If nothing has been given, you simply mention a dash. If something has been given to them, then you will mention the amount as given to them. Then clause B, going by that, whether the investment made, guarantees provided, securities given, and the terms and conditions of the grant of all loans and advances in the nature of loans and guarantees provided are not prejudicial to the company's interest. I hope you know these points. And then not only that, payments are regular or not, principal and interest. If not, whether the company has taken any reasonable steps. If it's not recovered for more than 90 days, whether any reasonable steps have been taken, okay, whether any loan or advance in the nature granted which has fallen due during the year has been renewed or extended or any fresh loan has been granted. It's a change in the wording there. And whether the company has granted any loans or advances in the nature of repayable on demand or without specifying any terms. Obviously, if you're not specifying any terms, that obviously be prejudicial to the interest of the members. So, have you given any of them? If so, specify the amount percentage thereof the total loans from the loans granted to promoters, related parties, as defined into subsection 76. Of the total loans given, how much is given to promoters and related parties? That is what we need to report now. Earlier, this clause belonged to only related parties. Now it belongs to everybody. Related parties only have a small role there in the last point as to how much was given to related parties. But we're broadly covering everything now. Okay. So that's the story about change in point number 3. Point number 4 continues to remain absolutely the same. Point number 5 continues to remain the same. But only thing the words here, whatever are deemed to be deposits. So deposits or whatever have been deemed to be deposits that have to be covered. Otherwise, the point is absolutely same. Cost records point goes on to be the same as well. Disputed, undisputed points going to be the same, but here this time they have also added up the point that disputed, you know what disputed is, right? When the company has gone into an appeal. So undisputed dues, fiscal 27A, ESI, income tax, sales tax, customs duty, VAT, and any other statutory that list and whether dues of the income tax, sales tax, excise have not been deposited in account of any dispute. So disputed and disputed dues points are there absolutely same, no tension. Now when it comes to point eight, yeah, whether any transactions not recorded in the books of account have been surrendered or disclosed as income during the year. In the income tax assessment would have been made. So it's absolutely a new point they added up. Okay, so you have to mind this point. What was earlier not disclosed anywhere, undisclosed income as it's going by. It's a very, very important point. Later, when an assessment was going on, that's when this point is being discussed. So, what you have earlier not disclosed as income, if you have disclosed anything now, I think that's a very important point for the shareholders to know what the company is doing like this. So, whether any transactions not recorded in the books of account have been surrendered or disclosed. Now, you are going and telling the department, yes, please take this into consideration as income. And such a thing which is called as unrecorded income, whether now it is being properly recorded and what have been the implications that has to be reported. So that's a very new clause. I want all of you to run through point 8 in detail. And then moving on to 9, whether the company has defaulted in repayment of loans or other borrowings or the payment of interest to the lender. And if so, the period and amount of default has to be specified, that is 9A. Now, what you will do is to focus on 9B because that's an absolutely new point. Whether the company is declared willful defaulter in any bank or financial institution, thanks to people like Mr. Vijay Mallya, these points are now supposed to be added up because willful defaulters have you, and not only that, we had DHFL after that and all that, many loans, okay, which have been willfully not paid by companies. So a clause like this makes pretty clear disclosure or description saying that yes, the company has already been declared a willful defaulter. So whether the company is declared willful defaulter or any bank or financial institution or other lenders, whether the terms with respect to which anything of those are also to be checked as per what the RBI circular is. So that's an altogether a completely new point. And then whether term loans were applied for the purpose for which they were obtained. This is a point that you already know. Term loans are applied for the stated purpose. Money from I2FPO, whether they have been applied for the stated purpose. I guess you know those points. There need not be any tension. Whether funds raised on short-term basis have been utilized for any long-term purposes, a new point to be added up there, and you got to cross-check on that one. Whether the company has taken any funds from an entity or a person, on account, or for to meet the obligations of its subsidiaries, associates, or joint ventures, and if so, you got to provide the details thereof. And also the last clause in 9, whether the company has raised loans during the year on a pledge of securities held in its subsidiaries. So whatever my holding is in, my subsidiaries pledge that. So subsidiaries, joint venture, or associate based on my holding. If I pledge that and if I have taken something, what is the consequence of that, and whether if at all the company is defaulted in any of those repayments as well. We have to be very, very clear on reporting that. Point number 9, I want you to go through all the 6 sub clauses because that is being substantially modified to include relevant content. So point 9, though I've run through the clauses, I want you to go through again in detail because that's a very interesting clause. The added possibilities of questions arising is very much there. And moving on, earlier clause 10 was on frauds, now it's been pushed to 11, and clause 10, this place is taken by the point that I just told you. I hope you are well aware of it. Money raised by IPO have they been used for stated purpose or not? That is 10 clause A, and 10 clause B goes by the same point on preferential allotment or private placement. So these 2 points were there in 2016 order also, no tension. Just that the number for this clause has been changed. It's now taken the position number 10 because you saw that clause 8 was introduced as per undisclosed income with respect to income tax is concerned. Now, obviously, clause 11, what you're going to see now will take point that was earlier in class 10. So fraud, whether any fraud by the company or any fraud on the company has been noticed or reported. So I don't think this point is any tension. I say 240 with the responsibility of the auditor. All this is cool. Now, what I want you to understand here a little bit interesting is see two new clauses have been added to the story. Whether any report under subsection 12 of 143, that is 143 subsection 12, you report it to central government in the form 884. Whether any report under section 143 subsection 12 has been made by the auditors in form 884 as per the company. Just asking you, did you report anything to central government under 143 subsection 12? If so, what was the report? Given that details are to be given here, and whether the auditor has considered any whistleblower complaints. That's an absolutely new point again. No, whether the auditor has considered whistleblower complaints of any received during the year. So whistleblowers are those people who bring out certain facts. So whistleblower protection policy is there. The whistleblowers, if they have brought out any point, what did the auditor do with that point? Like if somebody has told you that this is the situation, what did they deal with is also something that we need to clearly explain through that. The auditor is required to consider every complaint received by the company in clear details to understanding what will be the consequence of whistleblower complaint. That is essential for the auditor. What if you find anything, you have to report it as well. Point number 12 goes by Nidhi Company, no tension. You know that 13 point is on related parties, transactions under 177, 188, no tension or no issues there. And when it comes to point 14, yes, this is a new point. And on internal audit, actually, this was there before in the earlier CARO, but then was removed now. Brought back. Whether the company has an internal audit system commensurate to the size and nature of business. Okay. So does the company have a proper internal control system? That's what we want to know from this. And not only that, it's also important for us to know one more clause, whether the reports of internal auditor have been considered by statutory auditor. Now I know all of you that SA 610 in this regard, we had a detailed discussion about that. Using the work of internal auditor or using the internal audit to provide a direct assistance. So point 14 or clause 14 has been introduced with respect to internal audit and use of the reports of internal auditors. Please go through the clause. You might possibly get a question there on it. And 15 remains the same whether the company has entered into any non-cash transaction with directors. No change much of it. 192 subsection 1 and section 192 basically that talks about non-cash transactions with directors. Now is the biggest clause change with so much detail is 16. Whether the company is registered, this part, of course, is not worth the hype that I gave. It's not any big change, but further some process deep-rooted consideration is there. In this point, whether the company is registered under 45 IA of the RBI, that is the requirement for NBFCs to register. The question is, if so, whether the registration has been obtained. This was not attention because this is not a new point. Now, what's new here is going further deeper into the story of whether such an NBFC is being classified as a core investment company. Okay, that is what the further clauses are of. But let's see how deeper this goes. Whether the company has conducted any NBFC activity without a certificate, lending loans, accepting deposits, did you do any of these things without a valid certificate of registration? Is a point there. If at all, if you do anything as an auditor, you have to report them because if you want to do any of those activities, you have to obviously take licensing under 45 IA of the RBA Act, and if you do it without that, then obviously you are guilty, and that has to be reported here. Now the question goes further. New clause introduced whether the company is a core investment company as defined made by the RBI, and if so, whether it continues to be of a core investment company. In case the company is an exempted or unregistered core investment company, whether it continues to fulfill such criteria. Now, there is a detailed explanation as to what a core investment company is and whether the core investment companies are means non-deposit seeking institutions. So, what about those? This clause I want you to go through in clearer detail. Okay, in respect of those core investment companies having a total asset of not less than 100 crores individually or along with other core investment companies in the group and which raise or hold public funds, the auditor should verify whether the company has obtained the core investment company. The core investment company's main purpose is to make investments into other companies and whether the company lived up to doing that or not. Okay. And in the entire group, which is calling itself a core investment company, whether there is only one company like that or more than, whether the group as such has more than one core investment company, so how many are there and what are their details, that also has to be indicated there. So clause 61 is a clause with lot of new detail about non-deposit seeking special institutions, right, which are core investment companies have to be read in detail that you analyze. I'm giving you the material in full, so go through point by point. You will have a clearer understanding of that. Okay, and then going to clause 17 from here on, these are few clauses that have been added. Whether the company has incurred any cash losses in the financial year and the one immediately preceding that, complete 2 point added up. Clause 18, fully new, considering the so many auditors nowadays are getting tensed and resigning instead of giving wrong reports. So, whether there has been any resignation of the statutory auditors, and if so, whether the auditor has taken into consideration the issues, objections, and concerns raised by the outgoing auditors. Now, you do have an obligation to communicate with the predecessor auditors, right? So, whether that has been done or not, that also has to be properly cross-checked. And what we need to also check is clause number 19, which is some work on the analytical procedures for the auditors on the basis of the financial ratios, aging and expected dates of realization of the financial assets and payment of liabilities. I think you all are financial management students. You know what the financial ratios are. Based on that, you can see whether the entity is able to discharge its liabilities by using the assets. Okay. Another information given in the accompanying financial statement, the auditor's knowledge of the board of directors and management plans, whether the auditor is of the opinion that whether any material uncertainty exists as on the date of the audit report and whether the company is capable of meeting your liabilities based with the current assets that you have or based on the total assets that you have, will you be able to fulfill all your obligations of liabilities? And the auditor should check as on the date of audit report the company is capable of meeting its liabilities existing as on a date when they fall due within the period of next 1 year. So your future liabilities, whether you are going to be able to pay off them safely or not, is also a point that we would want to be checked in detail. That is another important point. Then clause number 20, whether in respect of or other than any ongoing the company has transferred unspent amount to a fund specified in schedule 7, this is for the CSR money, whether in respect of other than outgoing projects or ongoing projects, the company has transferred unspent amount to a fund specified in schedule 7 of the companies act within a period of 6 months from the expiry of the financial year in which it is supposed to comply with section 135. So the unspent CSR money, whether it has been transferred to an approved place, that is a fund as specified in schedule 7 or not, whether any amount remaining unspent under section 5 of subsection 5 of section 135 pursuant to any ongoing project, whether has been transferred to a special account in compliance with 135 subsection 6 or not. If it's an ongoing project, then it is clause B. If unspent money is there as per CSR, then it is clause A. So what you are supposed to do with that unspent money in the CSR, that has been discussed in clause number 20. Now, whether any consolidated financial statements are being prepared? That's the first question. If the answer is yes, now you have to see whether there have been any qualifications or adverse remarks by the respective auditors, where in the company auditor's report order of the companies which have been included in the consolidated financial statements. So, in the standalone financial statements of subsidiaries, associates, other people which now got consolidated in their standalone financial statement, because CARO would have been applicable to them and a CARO report would have been given, no? So, in those individual CARO reports of all those entities that form part of consolidated financial statements, are there any comments that were given by the respective auditors which are any qualifications in nature? No, sir, none of the auditors of those entities gave any qualified report. Cool. But if they have given, then if yes, indicate the details of those companies in the paragraph numbers of the order where such qualifications or adverse remarks have been given. Okay, so in the standalone companies reports, if there are anything, then we must have to be bothered about that as well, and we have to report that. Other than that, I don't see any kind of a problem or a confusion with respect to that. So point number 21 is applicable only to those entities where consolidation is being done. If consolidation is not being done, that point will not come. For an entity where consolidation is being done, in their standalone financial statements, you will report on this clause number 21. Okay, so that's a new addition. So from 17 to 21, those 5 clauses plus a little bit of changes that took place earlier, everything has been explained to you as an overview in this video. So I hope this video is of some help to you in understanding what are the areas that you need to focus. If you are giving one more round of reading to all the 21 clauses, I think that will suffice the purpose. We already have a CARO 2016 revision video. If you have watched that, then use this as an addendum to that and make sure that you upgrade yourself to that. If you are doing a complete CARO 2020 video, you also have the time issues. If they are not there, you can do so. If there are any time issues, then I think this video would have given you an insight on where all the changes are. Hope this video has been of help. If it was, then do share with all those people who are contemplating on what to do with CARO 2020. Push this message across to them that these are the changes, and you can also use the material that's given in the description for your full length revision as well. I hope you do well in the exams, and I will see you in my next video. Thank you.